Robinhood just stunned Wall Street. Revenue up, user growth accelerating, profitability improving, and Hood stock is reacting fast. The question now isn't what happened, it's whether this is the beginning of a major breakout or just another short-term spike. Here's the real breakdown. Robinhood just dropped its latest earnings report, and the numbers are definitely turning heads. On the surface, things look pretty solid. Revenue beat expectations, income from transactions is up, and their net. Ever wonder what Wall Street pros really look at when they size up a company like Robinhood? It's not just about the daily stock price. The real story, the true growth engine, is hidden in the user metrics. Think about it. Things like monthly active users, net deposits, and assets under custody are the vital signs of the business. These numbers don't just tell you if a company is making money today. They show you if it's actually growing or just treading water. Remember the whole meme stock explosion? It was a wild ride, but after the dust settled, Robinhood actually saw its user base shrink. That's why Wall Street is now watching these numbers like a hawk. Stability, or even better, a return to steady growth is absolutely critical for the company's future. Here's why it matters so much. When you see users depositing more cash and holding bigger balances in their accounts, that's a golden signal. It points to long-term revenue stability. It means people trust the platform with more of their money and they're sticking around. On the flip side, if user growth hits a wall and stagnates, the potential for the stock to go up might be capped. This last quarter, the numbers hinted at some improving engagement, which is a good sign. But one good quarter isn't enough to pop the champagne. Investors are looking for a pattern, a consistent trend over several quarters. In the world of fintech, a single explosive period is exciting but sustainable. Predictable growth is what truly builds long-term value. It's all about the long game. Ever wondered how Robinhood actually makes its money? Let's break down their latest earnings report to see where the cash is coming from. Historically, Robinhood's business model has been all about transactions. Think about it. Every time someone trades options, buys or sells stocks, or deals in crypto, Robinhood gets a piece of the action. This model also includes something called payment for order flow, which is a whole other story. Basically, when market volatility is high and everyone is trading like crazy, Robinhood does really well. But what happens when the market calms down? Their revenue can take a serious hit, and quickly. That's why the latest quarter's results are so interesting. We're seeing a major shift, diversification, thanks to higher interest rates. The interest income Robinhood earns from customer cash balances has become a huge contributor to their bottom line. This is a game changer. It means Robinhood is becoming less reliant on the unpredictable ups and downs of trading volume. For a while now, the company has been trying to shake off its reputation as just a meme stockbroker and evolve into a more comprehensive, full-service financial platform. This quarter's performance really shows they're making solid progress in that direction. It's a sign that they're building a more stable, resilient business for the long term. Pretty fascinating to see how they're navigating this transition, right? What do you think about this shift in their strategy? Let me know in the comments below. Thanks for watching, and don't forget to subscribe for more deep dives like this one. For a long time, Robinhood's game plan was simple. Grow, 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 and don't worry too much about the profits. And hey, for a while, especially when everyone and their dog was jumping into the market, that strategy worked like a charm. But the game has changed. So, a company's earnings just came out, and you see the stock price go absolutely wild. It's either soaring to the moon or tanking hard. It's easy to get caught up in that immediate, emotional reaction. But what really drives a stock's value in the long run? Robinhood remains one of the most watched fintech stocks in the market. High potential, high volatility, high attention. We'll continue tracking analysts' revisions and forward guidance as this story develops. Thanks for watching. If you found this breakdown helpful, make sure to like and subscribe for more deep dives into what really drives the market. See you next time.